Are you tired of the 95 grind and dreaming of retiring early? Well, let me tell you, it's possible. But it takes more than just saving money. It takes patience and discipline. Investing in stocks can be a great way to secure your financial future. But it's not a get-rich-quick scheme. It takes time and research to find the right stocks to invest in and to hold on to them for the long term. But trust me, the wait will be worth it when you're sipping tropical drinks on a beach at the ripe age of 40. Hey everyone, welcome back to my channel. Today, I want to talk to you about a topic that I know a lot of you have been thinking about: retiring early. I know it can seem like a far-off dream, but I'm here to tell you that it's possible. And I'm not talking about some get-rich-quick scheme or a magic pill. I'm talking about a solid strategy that you can start implementing today. Now, I know that a lot of people think that retiring early is only for the wealthy or the lucky. But the truth is, anyone can do it. It just takes a little bit of planning and a lot of discipline. And the key to it all is stocks. Stocks can seem like a scary thing to get into, but the truth is, they're one of the best ways to grow your wealth over time. And if you're looking to retire early, they're pretty much a must. But before we dive into the details, first, let's talk about the basics of investing in stocks. When you buy a stock, you are essentially buying a small piece of ownership in a company. As the company grows and becomes more profitable, the value of your stock will also increase, and you can make money by selling it for a higher price than what you paid for it. Before we dig into more details, don't forget to like and subscribe to our channel on your way out, and to hit the bell icon for all the latest updates. So, here a step-by-step guide to help you retire with stocks in 7 years. Step 1. The first step to retiring early with stocks is to open a brokerage account. This is where you'll buy and sell stocks, and it's also where you'll track your progress. Step 2. The next step is to research different stocks and make a list of potential investments. This is where you'll want to look for companies with a strong track record of growth and stability. Step 3. Once you've found a stock that you're interested in, it's time to make your first purchase. But remember, it's important to only invest money that you can afford to lose. Step 4. Now that you've made your first purchase, it's important to track your investments and monitor the stock market. This will help you make informed decisions about when to buy and sell stocks. Step 5. As you continue to build your portfolio, it's important to diversify your investments. This means investing in different types of stocks, such as blue-chip stocks, growth stocks, and dividend stocks. Step 6. Another important step to retiring early with stocks is to make regular contributions to your brokerage account. This will help you grow your portfolio faster and reach your retirement goals sooner. Step 7. Create a good strategy and set goals. With the right strategy and a little bit of patience, you can retire early and live the life you've always dreamed of. So why wait? Start building your portfolio today and reach your 7-year retirement goal in no time. Now, it might not seem as easy, so we have some important tips for you to help it work out. First, let's talk about the stock market. The stock market is where stocks are bought and sold. It can be a volatile place, but over the long term, it has proven to be a great way to grow your money. The key to success in the stock market is to diversify your portfolio by investing in a variety of different stocks from different companies and industries. Next, set your goal. When you have a clear goal in mind, you're more likely to take action and make things happen. It's like having a roadmap for your life. You know where you're headed, and you can make decisions based on that. And when it comes to retiring early, a goal is crucial. It gives you something to work towards, and it keeps you motivated. With investment comes some risks. Before you start panicking, we're not talking about taking on a ton of risk. In fact, we're going to talk about strategies for diversifying your portfolio and minimizing risk. So, if you're ready to take the first step toward early retirement, keep watching. So, think about diversifying your portfolio. This is one of the most important things you can do when investing in stocks. Diversifying your portfolio means spreading your money out across different types of stocks and even different industries. This way, if one stock or industry takes a hit, you're not losing all of your money. For example, If you only invest in technology stocks and the technology industry takes a hit, you're going to be in trouble. But if you also invest in stocks in the healthcare and financial industries, you're less likely to lose all of your money. Now, you might be thinking, but wait, if I diversify my portfolio, I'm not going to see as much of a return on my investment. And that's true. But you also need to consider the fact that you're minimizing risk. And in the long run, that's going to be more important. Another important strategy for minimizing risk is to invest in companies with a strong track record. This means looking for companies that have a history of consistent growth and a solid financial standing. These companies are less likely to go out of business and therefore less risky to invest in. Next, you need to know what you're investing in, and you need to be able to identify the stocks that have the most potential for growth. So, how do you do that? Well, one of the best ways to start is by looking at the company's financials. You want to look at things like revenue, earnings, and debt. These will give you an idea of how stable the company is and how well it's performing. Another important factor to consider is the company's management. You want to look for a management team that is experienced and has a track record of success. This will give you a good indication of how the company is likely to perform in the future. Once you've done your research and you've identified some stocks that you think have the potential to grow, it's time to start building your portfolio. But before you start buying, there are a few things to keep in mind. A lot of people think that using a financial advisor is the only way to invest and that it's a guarantee for success. But that's not necessarily true. One of the main benefits of using a financial advisor is that they can help you create a solid financial plan that is tailored to your specific goals and needs. They can also help you stay on track and make adjustments as needed, which can be especially helpful if you're trying to retire early. On the other hand, financial advisors can also be expensive. Many charge a percentage of your assets under management, which can add up over time. Additionally, some financial advisors may not have your best interests in mind and may recommend investments that are not suitable for your goals. When it comes to investing in stocks, a financial advisor can be a valuable resource. They can help you diversify your portfolio and select investments that align with your risk tolerance and goals. However, it's important to remember that past performance is not indicative of future results, and to do your own research. It's also important to note that using a financial advisor doesn't guarantee a successful retirement, especially if your goal is to retire early. Ultimately, the key to retiring early is to save as much as possible and invest in a diversified portfolio of stocks. So, if you're serious about retiring early, it's time to start thinking about investing in stocks. It's not going to be easy, and it's not going to happen overnight, but with patience and discipline, you can achieve your goal. And imagine the freedom and flexibility you'll have when you're able to retire early and live the life you've always dreamed of. Thanks for watching. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to my channel for more videos like this. And if you have any questions or comments, leave them down below. I'd love to hear from you. Until next time, stay disciplined and stay invested.